Well. Welcome back to Krown's Crypto Cave. Waking up for a very nice and beautiful Friday morning over here in Helsinki, Finland. Want to be wishing you well. Want to be wishing you the best on this very special Friday because today, this Friday, everything's expiring. So we got an expiration Friday on the last of the month. Of course, want to get into live scene right here, right now, as basically the big news for me is that actually my position that I started in November at 6,300s or 6,292 on these March features will be expiring in the next 5 minutes, actually. So the little baby position is about to go away for forever. So we'll kiss them goodbye. Do I want to exit it right here manually, or do I want to let it expire on its own? You know what? I think I'll just let it run its course. But overall, let's get into the actual Bitcoin action. And before I forget, Jesus Christ, man, talk about all the programs. The programs are on sale. All my programs with the code YEAR20. Let me just flash that really quick. All capitals, YEAR, and then the numbers 20. That goes for all the, all the payment plans as well, even all the way out to 10 months. I want to quickly explain them. The Trade Like Professional program is the all-encompassing technical analysis program, which encompasses not just technical analysis, but trading strategies, plus risk management, plus position management, plus understanding underlying market dynamics, plus entry into the members Discord community, plus access to a couple of proprietary indicators. The Master Options program is like that, but with regards to the derivative products options, I strongly suggest having at least a decent base in technical analysis before ever considering this program right here. And then the Joule indicators are literally just access to my proprietary indicators. But these two programs right here are both 35 hours plus long and really designed for more intensive, hardcore type minded people. For most people, they're not going to be really relevant too. Most people don't need to go through a 35-hour plus long program to do what they want to do, because these are really designed for someone who wants to do this typically as a living. And most people, have like a job somewhere else or other sources of income. They don't want to do. You might not want to do this as a living. If that's you, then definitely don't invest in these. Of course, take advantage of all my free content first. I have over 1,000 hours on YouTube for free and dedicated playlists towards that fact as well to understanding technical analysis. So if that doesn't cover it, then I would suggest considering one of these programs. But for now, let's get back into the actual analysis. I'm gonna get rid of this, get rid of that text right there, and then there we go. So Bitcoin actually having a decent close yesterday, did hold above the 10 simple moving average. So we did get that move down to test our supports. I was looking at 39.80ish area, didn't quite get there, but hey, that was kind of my trigger for staying in my long, which I actually still do hold right now. But lower timeframes are suggesting that we are approaching some pretty massive resistance right now, or I shouldn't say massive resistance, but our nice kind of resistance coming in from this prior high in 21st of March of this month. And as we kind of approach this area, I am keeping an eye on all of my Stokes and all my indicators, because what I want to see is I want to see everything turning to the upside if we are actually going to break it, and which would cause me to hold on to my long for a little bit longer, if that's not redundant enough. My point is that 4-hour Stokes are actually crossing up and over right now. What looked like a rejection on the lower time frames is actually being bought right back on up. And usually when I see something like this, it is quite bullish. So if we actually can take out this area, I guess it's more appropriately 40-40 on the lower time frames. The higher time frames with this descending trend line right here was born off of the daily, so I wouldn't respect it, on a 4-hour dildo time frame. But the 4-hour dildo time frame resistance trend line is right here at about 40-40. If that gets taken out, then really, realistically, I don't see too much holding this bitch back from 4100ish area. Could we come over and retest this trend line here, which I actually don't have drawn in right now? Very possible, something like this, but it'd kind of be meeting up in the same space, that 4100ish level, which not only that, it'll also be kind of fulfilling a test of the 200 exponential on the weekly, which is right over here, represented by the purple moving average, all the way right around 4100ish area. So that has been the highs of our whole consolidation ever since we dropped down into this zone in late November of 2018, 5 or so months ago. And as long as we are living below it, I am overall respecting this massive formation as just one mighty consolidation, which does still look corrective on the overall hold of me, although lower time frames certainly do look constructive, as we've been saying. So, it's, from this look right here, yes, I would say that this is quite constructive. Looks like it wants to break upwards and onwards towards around the prior high, somewhere around that, a little bit above 4100 looks about right. There is actually a measure move to be made on this formation as a whole, although I'm not sure if I would not really consider it just yet, as I need to see it again broken on a daily. But if we were to go ahead and make one, where would it be pointing towards? If we can actually fully confirm this guy above, or gal above this above that resistance, and I'll be looking at, there we go. Looking at a measure move, technically speaking, pointing all the way towards about 4,400, 4,500. So I do like that. It does have good confluence with our prior highs coming in from late November on that massive rejection right over here. And overall, yeah, I mean, really not much else to say about it other than that. The problem with playing counter trend moves, at least in my experience, is that when you're playing a move against the overall trend, so the overall trend, the trend has been down for well over a year now. While this move over here would be certainly more bullish in nature, so that I'd consider that a counter trend move. And typically, what I see when you get a counter trend move, a counter trend setup, it can look as good as it gets, but really have to be cognizant of the next major resistances, which, as we just showed on the weekly 200 exponential around 4,100, also kind of this former high right over here. So if things really do start to get perked up to the upside, I actually will be taking profits on my long once again right around 4,100. Basically what I'm doing right now with my long, and it looks like oh man, it expired. It's gone. It's no longer there. It's gone for forever. The March futures from 6,300 down to a closing price of 40.33. Dunzo, man. Fucking dunzo. Oh, well, that's okay. Let's get on over here to the perps, and I do have still this long position open, which is doing all right. I will, and like I said, I'll be holding it. The way that I'm going to play this one is that I'll hold it as long as we are essentially above this blue box right here at around 39.75, we could say. Yeah, 39.75. And I'll be looking to let go of somewhere right around 4,100 if we do get there. So that's kind of what I'm thinking right now. Overall, yes, the measure move would be pointing higher, but I'm not necessarily looking towards it. To be quite honest, I do not think that is going to get hit unless the Bitcoin breaks above 4,100. Bitcoin breaks above 4,100, then we're going to start to see the weeklies. The weekly will have follow through and carry over, and that would certainly open up the gates towards that towards move towards 4,400 to 4,500. Overall, I feel like I always do have to repeat this, but the overall formation, it'd still be bearish on the more immediate time frames. This could certainly be construed as bullish. However, just like we saw with that futures expiration position expiring, we do have CME expiration today as well, which is going to be very, 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 very important because we can bring up the CMEs right over here. And you can see that the CMEs look a little bit different than spot actually right now. Kind of getting in that double top zone from the late December, early January highs in this area. But not only that, we do see daily Stokes are actually, they're actually hinting at a cross up right now, which would certainly be more bullish. But we also are kind of printing some bearish divergence as well, or working on some right now. Could still certainly take some time, but hey, that is worth consideration. But more importantly, let's bring up the actual positions that people are putting on right now. This is the Bitcoin commitment of traders. If you're not familiar with it, on CMEs, which is a more legitimate exchange. I mean, I used to trade across the street from that on Jesus Christ, SIBO, Chicago Board of Options Exchange. My God. The CME is actually pretty renowned and strange, but basically because it's a professional exchange, the positions of the commercial traders versus professional traders versus retailer traders is documented, and we can actually bring it up in indicator format right here, which if I pull up, let's get all of this out and around. I'm going to change the institutional trader net to light blue. I'm going to change the professional trader to white. I'm going to change the retailer to yellow. Okay, cool. So retailers are the unprofessionals, the less educated when it comes to trading and investing, typically speaking. The light blue is our institutional traders, which are the professionals. Those are like the actual, a legitimately registered trader, and professional traders actually getting a little bit long as well right over here. But here's the thing. In the history of Bitcoin, in the history ever since CMEs got debuted, it was the institutional traders that actually did dictate the direction. Whenever they were certainly on one side, and especially when they were on one side against the retailers, that's usually when the institutional traders won. So let's actually go back in time and kind of give this guy a look. And basically, the last time that we saw this kind of divergence between the retailers and the institutional guys, again, the yellow and the blue, was right over here on the run to about 8,300 on this nice bull trap. The time before that was, in this area right over here, around 10,000. And now, once again, we are seeing significant short interest from the institutional players and significant long interest from the retailers. Net positions, what I'm talking about. So With expiration coming today, I really dislike holding this long. I don't like to have positions like on actual expiration. So I will be, I'm going to be at the computer all day is what it's going to come down to. I mean, 50,000 contracts long on a streamer account is not a big deal, but I do have this same position on my main account as well, which is a decent, it is a decent position right now. So again, the way that I'm trading this is as long as Bitcoin is above 39, let's call it 39.75, 39.80, basically this blue box territory right here, this guy right here. Let me get rid of the COT. Then I will, I'll keep that long. But the second that we actually violate 39.75, I will get out of that. Maybe even consider doing a short. Although, as a short, I wouldn't necessarily be looking for a big move. I'd be looking for more of a range, more rangy behavior, and basically just popping back down for a scalp, perhaps to the low side of the range at 38.80ish area. So again, not like a huge winner trade, but $100, potentially on the table, could be worth it. Anyway, I mean, that's just basically been Bitcoin for the last like few months, really. You get one $100 move per week, and then that's it for the week. See you next week. Anyways, yeah, we will be printing some bearish divergence on the 4-hour now as well. You can see a nice 1, 2, 3 tap and 1, 2, 3 right over here. 3 drives typically does the job. I'm curious where this next 4-hour Stokes is ticking right now. And actually, we're crossing back down. So that's a very weak tick to the upside that we saw on the hour priorly. Now we just got this next one 6 minutes ago and already crossing back down. Although unconfirmed, I mean, obviously, if this thing rallies back up and closes anywhere above 40.40, it's not going to take too much. That will open back up, and that probably will open the floodgates for an actual breakage of this horizontal trend line right here at about 40.40ish area, just the prior highs essentially. Anyways, so yeah, we spoke about that yesterday, but what I did get wrong about yesterday, or did I get wrong about yesterday? So yesterday we were right over here. We had just put in a little bit of bearish divergence on the 4-hour, and I was saying probably going to pop back down and retest a little bit below 4,000. We did 39.90, close enough. Close enough is close enough. Then pop back up, grind this area once again. Yes, got that. And now I think that we probably actually do come down here, but I don't have a strong opinion just because it is massive expirations, and we do see a pretty massive divergence between institutional players and retail players, which has produced actions in the past. That is what really stands out to me, and I really dislike that I'm actually on the long side right now. So, if we were to take out 40.40 by the other hand and close like a 2-hour dildo above there, I would be, I'd feel a little bit more comfortable holding this long, and I would be looking for a move, probably to formally test about 4,100. But it is quite enlightening to me to see that the high of this run so far is actually still below our last spike, our last spike high. What was it, like a week ago? Yeah, 21st of March, it looks like. Yeah, about a week ago. So that's what I'm looking at right there. I do see that our higher time frames are starting to switch around as well. But this is your 8-hour Stokes, which are getting pretty tired. We just got a new tick on that 8 minutes ago now, and you can see that they are getting tired is the right word for these guys. So are my eyes right now, if you can't tell. Didn't get enough sleep last night, unfortunately. But that was actually a pretty damn good close for the 8-hour 8-hour dildo right here, actually closing above the high of the prior, actually even looking pretty all right. If I'm just going off the 8-hour, there is a little bit of bearish divergence going on, but I'd still be, I want to be agnostic here is really what I want to be. I want to be agnostic. Let's go through the 6-hour. What is 6 hours looking like? 6-hour Stokes are down, confirmed down, but holding above all major movement averages. To be fair, that would be certainly quite a more positive thing. 6-hour RSI, more on the bullish side, I'd say. What about 12 hours? 12-hour Stokes still up, actually still getting very erect up. And more importantly, the 12 hours been getting it quite well. And this is what I should have been going off of yesterday. The 200 exponential right here, the purple movement average, is right around 39.90. And that is what has been kind of holding up this current consolidation. The 200 exponential has been harassing price action for the last, year or so. Each and every time that we've gotten above it, hasn't really, price action hasn't really maintained above it for too long. Well, right now we're actually, consolidating above it right now in a more positive manner, I'd say. Overall, though, like I said, the whole picture needs to be taken into context with each other, not just a small piece of the puzzle. But for now, I would say that 12-hour looks okay. Just looks like a massive consolidation right here. If we were to take up, I would be looking for a move towards about 41.10 to 41.30ish area to be exact. Let's see, where did our daily go yesterday? Daily Stokes did cross up, but it looks very anemic, looks very weak. We got daily RSI bouncing off the exponential. I do like that. So this, this is just one massive consolidation right here, is what it's looking like. Is it neutral or is it bullish? I'd say it's probably leaning a little bit more to the bullish side as we looked at on the lower time frames. This is constructive price action. The 50 exponential to the downside governing, and well, we got to go to a different time frame than the daily. We got to go to the 2-day. Actually, has been getting it right. The 2-day 50 exponential to the upside has been governing to the upside. However, we did take that out in the last tick, and guess what? That 50 exponential was now tested as support last night and held up above perfectly so far. And what else do we have? I mean, 2-day Stokes are up. So 2-day does want to rock and roll here is what it looks like to me. 2-day RSI is going to be printing some bearish divergence as well if this baby fails to take off relatively soon. So we are kind of like on a ticking time bomb right now is what it feels like to me. And this is what I'm saying, like, for today, I'm probably going to be at the computer most of the day just because I want to make sure that if a move does occur, I can be able to protect myself or capture more, I suppose. Like I said, I guess I'm cautiously bullish right now. And also I need to make it very clear. I don't really want to be. It's the right thing from a trader's perspective, at least in my opinion, the way that I trade. But from an analyst perspective, man, I'm long right into the massive resistance that's been holding this bitch back for the past 4 or 5 months. Not too comfortable with that, to be honest with you. But like I said, I have my risk management in place, and that's how I'll be handling it. And emotions aside, that's the way that I'll be trading it. Anyways, we do see that this 50 exponential, this green moving average right here, has been harassing price action for the past year pretty damn well as well. Just like we saw in the 200 exponential, every time that Bitcoin gets above it, it kind of calls like the last ditch effort of that rally attempt. We have one example staring us in our face right here, right at this run to about 4,100. The time before that, though, the times before that were significantly more dire or more intense, I should say. We had a brief stint above the 50 exponential right here, again the green moving average, and then straight down we had another brief stint right over, or a little bit longer of a stint right over here, and then straight on down to 6,000 from 8,400. Then we had another example right over here from 10,000 to 6,000, a lot more surgical on that one, and this one a lot more precise as well, the 12,000 double top before heading down to 6,000. So we do see a little bit of divergence in behavior because all of the examples of the past year, once the market cycle turned down, those never gave the trader multiple chances to short once we broke back down below the 50 exponential, which over here, we've been grinding it for literally a week, a couple weeks, which to me is a little bit too generous for it to be an actual legitimate short right here. That would certainly be on the more bullish side as Bitcoin has been resilient at these levels. But like I said, when it comes down to it, the way to trade this is very granular, is very specific, not necessarily the way to analyze it. The way to analyze it, analysts have no fucking accountability. That's why I like to show my trades. That's why I think it's very important to show my trades, because most people will never do that. I've been showing you guys this trade on these perps right here. I started out with like 180,000 contracts along like a day or two ago from 39.30, and now I'm just slowly distributing them. And that's essentially what I'm doing is, hey, if we break this area right here, we could even call it 39.90 now, as it has risen, and I'd even feel more comfortable with using the 2-day 50 and the 12-hour 200. If we break 39.90, I would love to get out of that position. But by the same token, as long as we're holding above it, I will respect it. Although this move can have all sorts of alarm bells ringing. So yes, okay, cool. So we spoke about the 2-day. We spoke about the 2-day Stokes. They're up. We spoke about the 50 exponential. We spoke about the RSI, which is RSI going to be printing a little bit of divergence as well, but not necessarily confirmed just yet. Still needs another close. What about 3-day? 3-day Stokes are going to be up now. So here's the thing: is that we just got a fresh 3-day dildo yesterday. Was it yesterday? No, it was today. It was today. There we go. Okay, that makes a lot more sense. And the 3-day dildos do look like they want up right now. They do look like they want up. 3-day Stokes are up. 3-day RSI holding above the exponential, just barely. We'll be printing some divergence as well, most likely. But hey, until we actually break this trend line at the at the neutral zone mark, at this 50 marker, basically the exponential, then not really it's still valid essentially. Basically this guy right here coming in all the way from the lows. We could even come all the way back down and test it and still maintain it. But hey, by the same token, it is making one massive rising channel, right? Which would imply more bearish nature. But remember, this is a 3-day dildo time frame. How many 3-day dildos can you fit in? Or sorry, how many like 4-hour dildos can you fit into a 3-day dildo? Right? It's a lot. it sounds like some sort of math equation. My point is that when I'm looking at something like this, as I check my phone, because my phone's going, oh man, oh man, my phone just goes crazy at the weirdest times. My point is that we can have some more upside in the lower time frames, but the higher time frames are signaling caution. So yeah, that's another reason why I'll still be holding this long. Another reason why I'm very cautious in this area is because going over here to the longs and shorts, we have a severe imbalance between the longs and the shorts. Once again, 24,000 open longs, or just under that, versus 18,000 open shorts. But wait, there's more. We have 3,500 of these guys actually hedged, so it's really 14,500 open naked shorts. This is very, 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 very low. We haven't really seen it this low, like in actual interest, in a very long time. And I'm talking about naked shorts, 14,500. That is non-existent. That is nothing, and that is also what makes me very fucking apprehensive. It makes me very anxious to be holding a position in this area to the upside. Could we get another pump and then that's it? Perhaps. But, traditionally speaking, these have been the setups that have led into major dumps, with the underlying market dynamics. Looking at the longs right over here, we are actually in the exact same places we were before 6,000 broke in November, literally right here, right around that 24,000 marker. And the shorts are actually a little bit lower than they were, cumulatively speaking, than what we saw on the November drop from 6,000 to 3,000. More importantly, for the shorts, each and every time that they've gotten into this red box territory, that has marked major, massive dumps. All of them except for one. This one right here, the one that we just saw most recently. We did not see a major dump off that. So do we have something new to consider? Possibly, potentially. It's a potential. But we haven't necessarily seen, if we were to break the 200 exponential on the weekly at 4,100 to the upside, and we still saw shorts in this area, I would say that is now confirmed. We now have something new to consider. It is no longer the trend. The trend has been broken. But for now, the trend is your friend until the end of the trend. The trend is still alive. And each of these downs into this red box territory, marking all the same downs that we looked at with regards to the exponentials. We could have done the same thing with the Stokes and also the Jewel as well. But basically, your double top at 12,000 before getting on 6,000. Your top at 10,000 in May, top at 8,400 in August, top at 6,000 in November, and then once again getting into this region. So something to be aware of, and I'm going to get back on over to my BitMexican chart and go on over to our oscillators, and I do want to take a look at what was it? Yeah, 3-day Stokes. 3-day Stokes are up right now, and let's actually go to Bitstamp so we can get a better read on this. But 3-day Stokes have actually formed a massive trend line going all the way back from here, December 15th of 2017. When Bitcoin was 20,000, and this trend line has formed and actually caught all of the major tops for the past over a year. And guess where we are right now? We are quite literally right there. We're quite literally right there. This was the top at 20,000, obviously. This was the top at 10,000 in May. This was the top at 8,400 in August. All of these massive, amazing, disgusting, violent bull traps. And once again, we have fulfilled this trend line. So do we see it come under pressure here? That would be a good signal. If I start to see the Stokes signal weakness, which they quite literally are right now. They are signaling weakness right now. That would be a good indication that this is actually going to get played out. If we can actually get a confirmation of a cross down within this region, like an actual confirmation with the cross and then then another tick also in that direction, that would be the next big thing that I'm looking for like an actual directional trade. For right now, though, still could charge up. I mean, it could very easily take out that trend line as well. But I'm just saying, things that I'm looking for if it is to be respected. So until that happens, it's just going to be more hearsay, essentially. Okay, cool. So we spoke about that. Let's go back on over to CMEs. I do want to talk about CME structure in general because CMEs are kind of forming a nice rising wedge right here. In this more immediate price action, which is very interesting to me because spot charts look a lot more constructive in the nature of how they're kind of putting this run together between this spike high, which got all the way up to about 4,100, but not on CMEs. On CMEs, we are actually forming a nice rising wedge, which my fucking charts keep on not saving. This is so annoying. With the resistance coming in right around here, right around 4050-ish area, and support rising over time, somewhere around 39 or 3950-ish area, we could say now. Now, more importantly, if I look at my oscillators, we do see that the daily Stokes are technically trying to cross up right now, but still down as far as confirmation goes. I need to see a cross plus one more tick in that direction, and then I'm cool to call it confirmation. But again, the daily stocks have actually been damn good at calling some major drops for Bitcoin over the past year as well. All the same areas. Your 10,000 drop, your 84, your 73. You get you get it. Anyways, going over to the RSI, we do have bearish divergence on the RSI. 1, 2, 3 stabs going on right now, and testing the upper resistance of this. I mean, we could easily get another like formal stab into this 40-50-ish, maybe 40-65-ish area. But overall, I mean, it is printing some bearish divergence right now. Not only that, but rising wedges are typically more bearishly resolved patterns. Not always. I've seen every pattern break out every way that it's technically not supposed to, but worth mentioning. And regardless, the overall resistance for this formation would be about 40-60, independent of the fact of what you call this with an English word, the supporting resistances are where I'd feel much more comfortable actually playing this out. Anyways, there is measurement to be made on this if it breaks onto the downside, which obviously would be confirmed with a move below 39.30. Then I'd be looking for a move down around 3,700. By the same token, if we were to break it up to the upside, it would be perfectly pointing towards that 40, what is it, about the 4,400 level? Yeah, about the 4,400 level. Not bad. Not bad. So it does have good confluence with the kind of the formation that we're looking at right now on spot charts as well, which I do like. But this one would actually imply a more bearish tone. Not only that, but for CMEs, I would become extremely bearish on CMEs if we were to break back down below this trend line. The trend line that essentially formed this massive pennant ever since late November till basically this present month in March. But getting 1, 2, 3, 4, 5 highs. Then we broke out of it on extremely low volume, and it is still being followed up with even lower volume. If we were to break back down below this, then this price action right here would be confirmed a hunt in my mind, and I would be looking for a very aggressive and violent move back down to the low side of the range at about 35.50. However, that also means that, hey, if Bitcoin breaks above this horizontal trend line right here, there's bulls have plenty of room to run for a little bit of time. But volume signature on this is certainly looking like a rising wedge, and multiple things to consider right here. And again, another reason why I'm a little bit apprehensive in this range. Okay, let's go look at the weekly, as the weekly is going to be closing tonight for CMEs as well. And the weekly for CMEs is. The weekly for CMEs makes me think that we're going to see a break either which way before end of night, before they close. Weekly Stokes on CMEs getting pretty up there. In fact, they're the highest they've ever been in the history of CMEs, but that's not saying too much. Weekly RSI is not really telling us too much either. There's just not enough history for it. We need to really go back on over to spot charts to get a good read for that. And weekly RSI for spot charts is quite interesting because we are essentially retesting the same area that we broke down from. Remember this area right here between June and November of last year, of the past year, where Bitcoin started consolidating between 6,000 and declining from 10,000 down to essentially 6,000. Well, that created a nice formation on the RSI. And right now, we are coming back to retest the same area that we broke down from, which is also right at the edge of the bearish control zone, which, as I look at this, and as I'm sure a lot of RSI people would say, this is kind of allowing the RSI to reset as long as Bitcoin does not break any major moving averages or major resistances or major supports in this area, and the RSI is allowed to kind of float up. That just allows it to reset. And remember, the big bad area to be aware of is this purple 200 exponential right here, the 4100-ish area. So as long as Bitcoin has not broken that, then that's just letting the RSI kind of float up. Nothing's changed from the macro from the macro higher time frame perspective. And then, well, you kind of guess what happens after that. So, at the end of the day, I always want to repeat this. If you're like a higher time frame type thinker, there's really not anything more to do than look at the pink 200 simple moving average right here at 34.50 and the purple 200 exponential moving average right here at 4,100. Whichever one breaks first, that's going to be the next nice big direction, I'd imagine. If we do break it up to the upside, I'd be looking for that run into the, at the very least into like that 4,500 number, and then probably even, open up the door possibilities towards a run into the deeper 4,000s, maybe even test 5,000, I suppose is possible. By the same token, If we were to break the 200 simple to the downside at 34.50, we'd probably be looking at new lows somewhere in the mid 2,500 range, somewhere right around here, which would actually line up with several technicals. If we bring up the drawing tools right here, you see this blue box territory between about 2,300 and 2,600, rounded out by these historical horizontal trend lines coming in all the way from June 2017 and July 2017. You know, some historical price action right there as one of the times that China banned Bitcoin, I believe. Not only that, but you see that this is rounded out by the 886 Fibonacci tracement right over here, which is actually where Bitcoin did bottom out in 2014, 2015 mark cycle right over here. And not only that, but if we throw in the volume profile, you will notice that this massive high value node is right in the midst of 2,500-ish area, which more importantly, you can see that once we lose 3,400 or 3,450, the volume profile shows that there's no business being done. There's low market acceptance all the way down to mid to low 2000s, which would imply a similar move, similar price action behavior to what we saw when 6,000 broke all the way down to our next high value nodes in the high 3000s. Not only that, but if we go over here to the BLX index, you will notice that the blues 377 exponential on the weekly is coming in right around 2,600. And if we go to the monthly, even more important, as the monthly is closing relatively soon in the next few days, that would be right around the 89 exponential right here, the cyan moving average. So again, you know, when I'm looking at these sorts of things and putting the pieces together, if Bitcoin were to break below 3450, that's where I start to actually put on a position. And I think it's very important to repeat this at all times. My opinion can be bearish. My opinion can be bullish. Right now, it's overall bearish as long as we're kind of stuck in this without breaking out to the upside. Sorry, when I say stuck in this, I mean the purple and the pink. However, as a trader, I will only be bearish looking for that next big move if we break the 200 simple to the downside at 3450. And then I'll start looking for that move. By the same token, as a trader, I'd only be bullish looking for that next big leg up outside of this range if we actually clear above the 200 exponential on the weekly dildo time frame. But for now, just filling out the same area that we've been doing for the past 4 or 5 months. You could even say on the weekly dildo time frame that there is hidden bearish divergence forming between this point in late December and this point that we're currently at right now as we approach that major resistance on our RSI as well. So a lot of things to be aware of right here. Also, weekly Stokes getting very close to the bullish control zone, and usually you do see some action, some counter trend action going on once you get around there. And the Stokes also kind of the same thing as the RSI. They're allowed to just float all the way on up, test the bullish control zone, but nothing's changed here. I really need to see those get into the bullish control zone and then price action close above the 200 exponential, and then I start to become a little bit more of a believer in a move towards that mid 4,500-ish area. By the same token, as long as we're stuck within this area, my overall opinion is going to be, well, the trend is your friend until the trend, and the trend is down. I'd be looking for some more downside. It can present all sorts of bearish things. I think this video has been a little bit more bullish, so I'll probably get some shit for that. But realistically, in the lower time frames, as a trader, have to be bullish in the lower time frames. The second that it violates 39.90, though, I'm out of this bitch. This is what I'll tell you. Let me just make sure that my camera is actually working. Oh, it is. Yes, my camera has not exit scammed, so that's awesome. But basically, this formation right here is really going to dictate the pace of the next phase of Bitcoin, I would say. If Bitcoin actually breaks the support of this formation, which would be rising somewhere around, I think 39. Sorry, whoops, we got to go back on over here. Is support which has been valid ever since middle of February, actually getting 1, 2, 3, 4, 5, 6 spike lows. If that gets violated towards let's just call it 3,900 now. If that gets violated, then yes, I would be I certainly would be a lot more bearish looking, and I'd also take a trade off that, looking for a move down towards 35.50, actually fulfilling the measure move right over here. But hey, one thing at a time, multiple trades staring us right in the face, and more importantly, there's actually been action in opportunity this past week, so quite nice. Anyway, let's go check out GBTC. GBTC has been the leader in the market, has been showing the way. And what do we see over here? 4 hour actually did break this trend line. What do we see on the daily? Do we see continuation on the daily? We do see continuation on the daily, closing on the lows as well. I really want to see us take out the former low, but hey, GBTC wants down, and GBTC has been a great leading indicator. Daily Stokes on GBTC are down, and the daily Stokes for the past year have been great at calling major down movements ever since the turnaround in December 2017, right over here, calling all the tops. February double top at 12,000, May top at 10,000, August top at 8,400. 7,300 high in September, breakers of 6,000, and once again kind of turning down. Has had a couple of not perfect signals in this more ugly area right here, I guess you could say. But overall, this formation does look kind of like that same rising wedge that we saw on CMEs, and more importantly, having a nice double top from our early January highs, and on top of that, also printing some bearish divergence on the daily, 1, 2, 3 stabs back below the exponential as well, and trending below the neutral zone now as we break or as we hinted a break of the low side of this formation. In fact, as far as the daily concern is concerned, that is confirmed. And I would be looking for some more continuation. I'd feel more comfortable calling it if we could actually take out the low of this delta right here at 448, which I do have a nice alert for that. But I'd imagine that if we do see continuation today, then that'll probably happen. If I'm just going off of dildos and oscillators, and I would say that it probably does want some more continuation right here. And like I said, it has been a great leading indicator for spot charts for the past over a year. Has been pretty damn good. Okay, let's also go on to the weekly for this guy, as weekly shows a massive rejection last week. The yellow 21 exponential getting absolutely shoved right off the cliff. The yellow 21 exponential has been harassing price action ever since April 2018, which was the run to 10,000 before going on this ultimate dooms drop all the way down to our current position. In fact, the weekly for GBTC looks quite more awful, making a massive rising channel right here, going all the way back from December. We could maybe draw on in for a second. It's going to be really convoluted, but you kind of get it. Oops, let's take this off. Rising trend line right here. Rising trend line right here. Overall, we do see weekly Stokes getting pretty damn up there. We haven't seen the weekly Stokes this high since January 2018, more than a year ago. Weekly RSI printing the same sort of bearish divergence. Actually, sorry, not the same sort of bearish divergence. Printing bearish divergence. The other ones are printing hidden bearish divergence. And looking, and we're getting the same sort of behavior where the RSI is just floating up. Price action has not broken any major resistances or supports for that measure. But the RSI is allowed to kind of reset itself as price action doesn't really make any progress, is what is really what I'm really getting at as I take a sip of this water because I'm damn thirsty. My ground beef today was quite dry, man. All right, cool. So we covered that. We covered low time frames, higher time frames. Okay, cool. We can get back on over to Bitcoin right now, see what he's doing. Just fucking around this 40, 30-ish area. Again, like I said, lower time frames really do look like it wants to look like it does want to take off here. But remember, with a massive event like CME's expiration coming later today, a lot of the time I don't like to have positions coming into something like that. You just don't know where people are going to roll on their positions, and like we showed on the commitment of traders, historically speaking, when we see this sort of divergence between retailers and institutional players, it goes in the favor of institutional players pretty much every time in the past, which we don't have a huge sample size, to be fair, but there you go. All right, cool. Okay, all right, so we talked about that. Let's go talk about some shitcoins now. Or actually, no, let's go talk about the crypto fear and greed index. We're currently at a 50, right there in the neutral zone, which is perfect timing for this, just to add ultimate confusion into the market. We're perfectly neutral as we approach a major resistance, and we see all sorts of conflicting signals. Just beautiful. Just put it right in the neutral zone. Absolutely. But more importantly, I suppose the trend, if I had to make anything of this, the trend has been for the past year, each and every time that this oscillator gets above a 50 marker, it actually has called tops as well. So, the same areas that we looked at on price action. February double top at 12,000, May top at 10,000, August top at 84, dump in September from 73, break it to 6,000 right here, and then we've actually spent some time above the 50 marker in this past month and a half, without a significant dump. Now, yes, we have seen some downside moves. This one stands out, but we haven't really seen like that massive, crazy, aggressive move dumping all the way down to the low side of the range, which for now would be actually all the way at somewhere right around 34 to 3,500. So again, we're not really seeing the same sort of behavior. So is it, it's certainly bringing up the conversation, and the conversation is very valid to explore. Are we seeing a difference in behavior? Because in some cases, we are starting to see perhaps the initial etchings of it, but unconfirmed in all cases as well. More importantly, let's go check out traditional markets really quick. Traditional markets still being resilient at this level. Oh my God, are they going to actually rally off this level? Are they going to actually rally off this level? Let's go to a daily. Nah. I mean, if it does rally off this level, it's probably going to grind this area 282.5 and then come down. But still, I'd still be looking for this move down to about 275.5. Remember, these things take time. When we're looking at a daily doodle chart, and we do these videos every day. It's how much progress is done in a day. I mean, look at this. It's not all that much. Let's go over to a weekly, however. Last week did look like a rejection and closing down on a little bit. Do you want to call this shooting star dildo? I don't know if I'd call it that. Does have a nice long shadow to the upside though. Weekly Stoics looking tired. Weekly RSI printing a little bit of divergence as well. Whoops, let's get that on there. And usually when I see that, I want to see a test back down to the 21. But going back on over to the daily, yesterday did not have a full breakdown. Now we did not take out the 10 simple, but we also didn't break the 21 exponential. I mean, technically speaking, as a trader, I need to see the 21 exponential broken. Then I'd be looking for that move down to about 275.5. But overall, I think I'd be looking for that regardless. Jewel wants down, daily RSI printing divergences. While it could easily pop up here, overall, I'd say that it wants to consolidate lower, and daily stuff's coming down as well. All these things, in confluence with each other. But, of course, we have the one thing that I do not fuck with, and that I do not trade against, and that is a daily doodle golden cross, the green 50 exponential and the purple 200 exponential crossing the upside right over here in early March, which my rule is that I'm not bearish on anything that has a golden cross that's still above the 21 exponential. And right now we are still actually above it. So my personal opinion is that this thing does come down. As a trader, I'd actually need to see it broken first before I enter into a position. But I do have kind of a strong opinion about that. Whether we pop up, again today and kind of like grind this like 282 area, 282.5, I think the results are likely to be the same. We're probably going to see it come back down. More importantly, I do want to say this, and this is the reason why I look at traditional markets quite often, is because there's a lot of confluences between Bitcoin on the macro scale and traditional markets on the macro scale. Now, Bitcoin is going to be represented by the orange line chart in the background. And you can see that ever since 2015, 2016, the end of the bear market for Bitcoin, and also traditional markets were going through a nice correction during that time as well. It was straight up for the next 3 years. Straight up for the next 3 years. Bitcoin tops out about a month before traditional markets, and then they both come down, making major lows beginning of February. Then they pop back up, put in a double top right here at the exact same time, pop back down, put in this low right here, then pop right on up. Bitcoin gets rejected and goes into a sideways consolidation on the downside, whereas traditional markets go into a sideways go into an upwards consolidation. But remember, once Bitcoin broke 6,000, that was the same time when traditional markets had this massive dooms drops right here. Then once again, we see the same sort of behavior where Bitcoin goes into a sideways consolidation essentially, and traditional markets go into an upwards consolidation, kind of similar to what we saw right over here. So if traditional markets were to confirm down, if they were to actually start to gain momentum down and break some major levels like 275.5, then could that be perhaps another indication for Bitcoin? Yeah, it certainly could. That has been the trend in the past as these guys have played their major their major moves out together. Not like the minutia, on like the intraday scales, but on the actual, maybe like on like a weekly, you could certainly make that. You could make that argument. Not only that, but let's go on over here to Mr. Buteau now. Let's go talk about some other top shitcoins as I hiccup. Do I have hiccups? Jesus Christ, man. Mr. Buteau going to be grinding that resistance, it looks like, or wants to take a leg up and test it at 143.5. That is the big one to break. If 143.5 can be taken out, I'd be looking at a move probably towards 152. At the very least, maybe even more, maybe 162. If things get really crazy, but 152 I think would be pretty reasonable. We do see that we have this rise in support trend line right here coming in right around the 382 Fibonacci retracement, which just pull back on over here so we can actually see it. There we go. And if the 382 gets broken, which is currently around about 137-ish area, then I'd be looking for a move down here to kind of test this horizontal at 127, basically kind of the former bear trappy area that we broke out of to the upside. Similar for Bitcoin would be right around like about 3,600, I think. But of course, Mr. Buteau has not had the most clean chart as of recent times. It's been Bitcoin and Mrs. Litecoin that are showing the way. However, Mr. Buteau is showing daily Stokes up. So fair enough. Daily RSI looking okay. I'd say it's a neutral consolidation with a slight bullish tint, I suppose. Well, would I say that? Let me retest that. Yeah, I would say that. I would say that. So yeah, but again, I think really the time should be spent on looking at Mrs. Litecoin, which Mrs. Litecoin is not participating in this recent up action that we just saw in Mr. Bitcoin. But here's the thing, and I'll start off by saying this: Mrs. Litecoin has a golden cross confirmed on all time frames, on daily time frame. Which again, like I said, just the same as SPY, I don't trade against that, especially as long as you're above all these major moving averages. Definitely don't trade against it. For me, of course, it's not financial advice. I'm not a financial advisor. But if Mrs. Litecoin were to break the 21 exponential, then yes, I might consider a trade to the downside, looking for about 52 to 53 and a half, or sorry, 52 and a half to $53, somewhere right over here. But for now, I mean, here's the thing. You can look at all the technicals. All the technicals are going to tell you bearish. We have major bearish divergence going all the way back from basically the beginning of February, fucking month ago, 2 months ago, basically. We do have daily Stokes crossing down as well. We do have daily Jewel, which is going to be setting up for daily Jewel wants to set up for a perfect sell signal. It's probably going to happen in the next few days. We've been watching this one for a while. I think it is going to give a legitimately perfect sell signal. All those things can be present there. And we can also even have an ascending broadening wedge, which is also a bearish, typically a bearishly resolved pattern. But until I actually see it violate these areas, I will not take that trade. I don't care. It's just my rule. The golden cross on the daily has just, usually here's the thing though. Here's the thing. And here's why I'm probably going to be, here's why I probably should pay attention to all the things that all the things that I just spoke about. Usually the first cross after a long trend fails. So this death cross has been valid ever since May of last year, so almost a year. Almost a year. How many months away is May? We got January, February, March, April, May. Okay, yeah, so we're about a year. And usually the first cross actually does end in a fake out. We can go over here to Bitcoin and do a good example on Bitcoin, going all the way back to 2014, 2015, which was the last time that we saw it kind of snake around. But basically, Bitcoin got death crossed. Yeah, the green and the purple right here, and then it played that death cross all the way out until it got golden crossed, technically speaking, did it get golden crossed right here? No, it did not. It did not. Sorry, I'm wrong on that. It got golden crossed and then straight on up for the next 3 years. What I'm thinking of is this example right here, where we got death crossed right here. Yes, we got death crossed right here after a very long golden cross. I mean, for 4 years, three or 4 years, and then we got death crossed for a second. That did not play out too well. Then we got golden crossed once again, and then that got sold into, and then the actual move occurred. So the first death cross did not get played out. And that's kind of what I'm trying to get at, is that typically speaking, after a long trending move, the first counter signal is usually a fake one. So is that what we're going to see on Mrs. Litecoin? Well, like I said, there are plenty of things suggesting that she wants some down here. She wants to get down. This dirty little Litecoin girl is really, really freaky. My God. But lower time frames are not participating in the same sort of action that we're seeing on Mr. Bitcoin. Bitcoin is actually testing its kind of prior highs, right? Mrs. Litecoin is struggling to kind of hold this area, is still holding this trend line right here. If $59.90 breaks, I'd be looking for a move back down to test $58. But for right now, looking a little bit more, I mean, it's just consolidation is what it really comes down to. Really, I should be paying attention to this horizontal right here, in fact, and get rid of this guy. Although if I were trading lower time frames, this is what I'd be cognizant of. I know that there are certainly a lot of people out there who want to trade lower time frames. Usually I don't focus on that on a video like that, but hey, completely valid. We have a trading range: $58 support, 61 and a third resistance, whichever one breaks first. If it breaks onto the upside, I guess that we'd formally test $63.50. By the same token, if we break it to the downside, $58, we'd be looking for that move towards about 56, something like that. The thing is that a lot is at stake right now, because if Mrs. Litecoin can break above $63.50 and really initiate a full-on golden cross on the daily, and I would say that is 100% confirmed. If $63.50 is broken, then I'd be looking for a move. I mean, relatively quickly to about 73.5, but realistically, I'm just not bearish anymore on Litecoin. There's no reason to be from my side. I mean, shit, at that point, realistically, I'd be looking towards 100 if that were to happen, for like, a longer term move. But yeah, this rally is starting to look like it's losing a little bit of its strength. So again, if I am going to play that upwards move, I'd really suggest waiting for confirmation on that one, $63.50, to see that this golden cross is going to be played. For now, we have plenty of dissenting behaviors with it. It's not so cut and dry on this one. Let's go check out the other top shitcoins. We got Cardano over here. Cardano testing 1700. Ooh, I think I was wrong on this one yesterday. I think I called. No, yesterday I said that it was probably going to grind its top. We are grinding the top at 1700. And hey, actually, I know that I had a trend line like this. Something like this. Yeah. We're kind of forming a massive rising wedge on this one as well. Yeah, the question is, does it break 1700 or not? As long as it's kind of living below, I'm not necessarily a big believer in it. We do see the same sort of volume signature for a rising wedge as well. I mean, like I said, I've seen every one of these patterns break out every way that they're not supposed to, and this one's supposed to break to the downside, more statistically likely at least. But if we can break above, 1700, then really I don't really see too much holding it back from about 1900. This next horizontal right here, yeah, around 1900ish area. That's going to be the big test for this one, because if it can actually clear 1900, then I wouldn't really have a reason to be bearish on Cardano. I'm not really bearish on it right now. I mean, ever since the breakout out of 1350, not really appropriate to be bearish on it. I don't know how to describe my feelings on this one right now. I guess my mind's telling me no. No. You can't be bearish. You broke it out at 1350ish area right here, so fair enough. Can I be bullish on it? I mean, we're right at resistance as well. I don't want to be bullish here either. Let's look at our daily and see what the daily oscillators are looking like. Daily Stokes are snaking around, looking tired. Daily RSI, a little bit of bearish divergence, not crazy. I'm going to guess that if we go down to maybe an 8 hour, we'll see some more pronounced action. And yeah, we do have some bearish divergence going on right here, as you can see between these last 3 points. Is the 8 hour jewel setting up for a sell signal? Ooh, keep your eyes on this one. This might be interpreted as an extremely good sell signal. It might get another stab, but as long as it stays below 1700, I would consider that potentially a perfect example of a sell signal. It's damn close. I mean, it's not like technically I want to see them like all kind of splayed apart, but perhaps good enough. If I see this next tick start to turn down, that would be it. That would be it for me. And what's up on YouTube? Who is that? Man, I can't read your name, but hey, pleasure to meet you, my friend. So we talked about Cardano right there. Okay, let's go talk about BNB. What's BNB coin doing? BNB, I think I'd still be looking at this area as probably a topping area. We do see daily Stokes up. We do see daily RSI still having the same sort of divergences. I mean, is it going to consolidate this area, grind it out, and then fall over? Kind of what it feels like. Yeah, kind of what it feels like. This run is getting pretty extended now. Let's go to a weekly. Weekly's going to end pretty strong though. I mean, the weekly's fine. Here's the thing, the lower time frames do look to me like they probably want to pull back relatively soon. We are kind of hitting a major horizontal trend line, a major resistance right around that 17 and a quarter range. As long as we're living below 17 and a quarter, I mean, we can pop back up, retest this area a couple times, but overall, I'd probably be looking for it to pop back down and test about $15.40 ish area. I mean, unless a 15 and a quarter is taken out to the upside, 17 and a quarter is taken out to the upside, then, I mean, there's, technically, yeah, there is resistance overhead, but the whole chart starts to take on a different meaning. But I suppose if I had to say something about $22, where I'd be looking towards. But for right now, this it probably looks like it wants to retest this area, $17 and a quarter-ish area, and then probably fall on over and retest some downside supports. Not necessarily saying that it's bearish, but I would be saying that I would be looking for consolidation lower and then probably try higher. Higher time frames do look good, like the weekly. Daily looks like it could use a little bit of daily looks like it kind of wants to come back down and consolidate a little bit lower. Let's look at the daily jewel. What do we got here? here. Daily Jewel is likely to set up for a perfect sell signal as well in the next few days. So that kind of does make me feel a little bit more confident in this, that, yeah, probably spend some time, grinding this $17.25 area right here. And then, after a few days, probably does come back down, but still going to take a few days. Let's go look at Zcash, 57. Zcash still in the descending triangle, not good. Bcash, the real Zcash, is still grinding our horizontal right here at 175. If 175 can get taken out, I'd be looking at $200. But we see the same sort of divergences going on in this guy, bearish divergence on a daily. Probably going to pop back down and test this 154 area is what I feel a little bit more confident with. Daily Stokes looking tired as well. Tron Cash looks like it wants to test 2.5 cent to me. Taking a leg up here, again, it's just been a game of the purple and the purple and the pink. The last time it gave you a chance to buy the pink, now probably a chance to sell the purple. Although daily stocks are down. That's strange. It's probably going to do what the rest of the market does, to be fair. Jewel did give I was going to say it gave a buy signal right over here, but not really. Or at least not a super strong one. But yeah, I'd probably be looking for another run up to test around 2.5 cents, something like that. Neocash wants to test 960. If 960 can get taken out, I'd be looking for a run towards $10 even. But again, gonna do whatever the rest of the market does. I could very well just grind this area out 960 and then fall on over. If everything else starts falling over, so will Neocash. EOS Cash, I would. Ooh, did we get the full on move to 4.5, 440? That's pretty close. Yeah, I'd still be looking for that move to 450ish area, somewhere right around here. Daily Stokes still up. Daily RSI is looking okay. I mean, it's just a nice bullish consolidation over a long period of time is what it is. We got this rising trend line, and then this trend line is going to come in somewhere right around here, most likely. Something like that. Or we could just use this horizontal. It's all the same. In fact, I'm going to lower it down and use it on a daily. In fact, I think I'm wrong. I think I am wrong. We are right at the top of the resistance right now, coming in with our former high. Do I think that this one's topped out? Let's look at the Jewel. The Jewel's kind of setting up, or is it? Ooh. Okay, so this is a very interesting setup for the Jewel. I don't typically take these, but it's gonna take at least one more daily dodo close. If you see the light blue, if you have access to the Jewel and you see it, and you see the light blue start to curl over to the downside, that'll be a sell signal, and that'll be a very powerful sell signal. If you do not, if you see the light blue continue to pierce through the other two signals, then that will actually be a buy signal. So we're at a crossroads right here. We're actually a pretty damn good trade can be had on either side. If it does break to the upside, I'd be looking for that move to, I mean, technically 455, or sorry, is it 460? Yeah, about 460. Anywhere between 460 and $5, where I'd kind of be looking towards. But right now, I wouldn't be surprised if we actually grind this area out and then pop back down and test $4.10. I think that we kind of got that move to 450 that I was looking for before. I mean, close enough is close enough. In trading land. Let's go look at Mr. Ripple's nipples. How's he doing? Mr. Ripple's nipples still being beheld in below this more immediate trend line right here that we broke down from earlier in the week. Still below all major moving averages as well. The nipple wants to be freed, but my God, the rest of the market's kind of putting him in his backpack. Daily Stokes are up. Daily RSI is neither bullish nor bearish. Here's the thing with Mr. Ripple's nipples is that I don't trust technicals as much for Mr. Ripple's nipples because I've just seen the most crazy things with him. But, technically speaking, this is a massive descending triangle. We broke the more immediate support to the downside right here. We've retested it and rejected from it, and we're still living below all major moving averages. So technically speaking, as a trader, I'd have to be bearish. Again, I don't trade this guy, so it's kind of a moot point to begin with. But hey, if you break above 31, let's call it like 31.2 cent, I'd be looking for a move probably towards 32.5 cent. Would I say that? No, I'd be looking for a move here about 33.5 cent. By the same token, as long as we're kind of respecting all these moving averages and this resistance is probably a sell. But then again, it's going to do whatever the rest of the market does. Most likely. The Bitcoin pairing. Yeah, the Bitcoin pairing looks more bearish. The Bitcoin pairing wants to come back down and test 74-ish area. The problem with the Bitcoin pairing, though, is that it's been beat up so much. It's been beat up so fucking much that, it's not going to take too much to get all, if someone just market bought, I don't know, a few million, then you're going to start to get you get a nice little pop, and then that's going to trigger all the divergence spots, and then you're going to get some sort of self-fulfilling prophecy, bring this guy back up to maybe like 78, 79. But for right now, as far as all the technicals go, I would say that it's more bearish, below all major moving averages. Fresh death cross as well on the daily, probably coming back down, testing 70, a little bit below 74 maybe. Let's go check out Monero Cash. What's Monero Cash doing? 53.5. Yep, testing its overall resistance. So everything's testing major resistances right now, or right around that area. So if you see one of the majors start to turn down, that's probably going to be a good indication that the rest of the market wants to turn down as well. Let's see, what else have we got? Stellar Cash, same thing, just coming back up. Probably wants to grind this like just below 11 cent region right here, anywhere between 11 cent and 11 and a quarter. And then I'd imagine that if that gets rejected, I'd be looking for a move back down, probably to 9.5 cents. Let's see what our Oswald is saying. Daily Stokes are still down. Daily RSI still down. Could we see this move happen sooner rather than later? Let's go look at the weekly. Whoops, this is convoluted AF. Yeah, last weekly close is kind of a rejection. This one even had continuation. I'd say that's a little bit more of a bearish chart. Let's go down to a lower time frame, 4 hour. Man, this one's strange. Yeah, 4 hour Stokes down, 4 hour RSI. Wants a little bit down as well, but. I can't stress this enough. It's going to do what the rest of the market does. If the rest of the market breaks this resistance, you're going to see Stellar make its way back to about 11.25 cent. If the rest of the market turns down, you're going to see him pop back down at the very least to 9.9 cent, and then probably lower at around 9.5 cent. So yeah, I think that covered it all. I'm gonna get back on over here to Mr. Bitcoin and then lock this bitch up. But basically, lower time frames, constructive, do look like they actually do want to break up here. Greater picture, still very corrective in nature. Looking at this, oh sorry, I do want to show one more thing. Let's actually go back on over here to Bitstamp. I'm gonna throw on the MVT signal, which is the network value divided by the daily transaction value. More importantly, it's called all the tops and all the bottoms in Bitcoin's history perfectly, regardless of what anyone says. That's the facts right there. And until I see that trend change, I'll just run with it. And realistically, we have not seen any change in the way that this is calculated versus the overall market structure, and have a difference in the result. More importantly, since the history of Bitcoin, it's been perfect. That's kind of my point. Anyways, right now in the more immediate timeframes on the MVT signal, you do see that we do have a nice trend line forming. Sorry, we had a nice trend line forming, which we actually broke. We actually broke that trend line the other day, right over here, and we've actually retested it and still turned down from it. Again, the MVT signal calling all the tops perfectly, which not only that, we are in the area where it starts to call tops, or about at that area. We are currently at a 138.25 read, and it typically starts printing red above 140. So again, calling all the tops in Bitcoin's history perfectly, all the major market cycle tops, going all the way back. Each and every time that signal is red, it's not like it doesn't tell you the exact moment that it's going to turn down. Obviously, it spends about a month in the red zone area. To be fair, I mean this was red for about a month or two. This was red for about a month or two. This was red for about a month, and this was red for about a month. This was red for about like 4 or 5 months, but is a warning signal saying, hey, historically speaking, that is where major tops have been called. We have broken that trend line, so we're worth consideration as well. Anyways, today really the big news for today is going to be the CMEs, and they do expire relatively soon. We'll probably be able to view it live together later on live stream, but in the meantime, if you're playing the lower time frames, I need to see a 4 hour total, closing above about 40.40. Then I'd be looking for a move probably towards 4100 if that were to happen. 4100 looks pretty damn likely if that were to happen. By the same token, on the daily, if we can just close the daily above where we are right now, because remember, on the daily, I made this formation right here, so I respect it on the daily, and if we can close above this formation right here, then that actually kind of have the same target, actually. I don't want to get too damn bullish, even if it does break to the upside, just because 4100 is such a massive area, historically speaking, as it is a 200 exponential, and that has been harassing price action ever since we got into this more aggressive downtrend area, which we had never really broken the 200 exponential in Bitcoin's history to begin with. Although, it's also a moot point because Bitcoin was just relatively young, so it didn't really have a chance to break it before. So fair enough. Anyways, back down to the lower time frames to kind of round this pitch up. If we were to break that back down below about 39.90, then I would be looking for a move. I'd be getting out of all my longs, as I said before, and I'm actually going to raise it up right here, 39.90, and I'd be looking for a move back down to the low side of the range. But for now, yes, we are printing some bearish divergences on lower time frames. Yes, there are some certainly some underlying market dynamics suggesting some downside here. But hey, until price action confirms, I will not be taking positions either way. Like I said, I'm long right now, so I'll be holding that long as we are above about 39.90, and I'll be looking to get rid of some of it proverbially or potentially right around 41, a little bit above 4100 most likely. So that's what I'm looking at right now. That's going to do it for this video. I'll be back on later with some more live stream action. Looking forward to that. And as always, want to be wishing you well on this beautiful Friday. And of course, remind you just once again that all my programs are on sale for the rest of the month, which is another day, 2 days, yeah. So I just want to make sure that the people who are interested in that have full information on it. Make sure that, again, you read the reviews, obviously, and make sure that it's good, it's a good fit for yourself. Anyways, I'm going to leave you with that, and we'll be back on later with some more live stream action. Take care and see you soon.